Good morning. My name's Ryan Littlestone from forexflow.live. I'm going to continue with a theme that we've been speaking about over the last few weeks, which is dollar versus the yen. And we seem to be breaking all the levels at the moment. Going to start with a daily chart here. Again, chart we've been looking at for quite a while now. And sort of nearly four levels that I've identified here. I've got one at a trend line that I've marked sort of level 2.5 in the mix. And then what we've seen is this big move up. And as I say, we had a big level around about the 106 area, level one, broke through that. Last week, we were heading up towards the 50 fib and the 107.15 area. We've blown through that. And indeed, we've blown through the second level up around the 61.8 fib, you can see on that chart there, and around the 108.20 level. This was a big area that I was looking at, and we went through pretty easily, which shows the strength of the trend in play at the moment. Because when you get a move that pretty much wipes the floor with all the tech, that's when you've got to take notice, because the tech is good for something, but if you've got a big fundamental move happening, sometimes the techs just get blown out the water, as we've seen now. So what we've got here is a move up towards a trend line, and we'll look at that in the chart in a minute. But it's level 2.5, as I've just said, and it's a big trend line coming down from sort of 2016, 2015, that sort of area. So it is going to mark potentially a break here. It's going to mark another shift in this trend and potentially moving above this long-term trend that we've seen in play. If we do that, get above this line, then we've got another big technical area around the 109, 110 area. This is level 3, as you can see on the chart there. And again, if we break that area, then, we could be going anywhere. We could be going up to the 112s, 115s, maybe even 120s. But I'm not going to get ahead of myself just yet on those sorts of levels. Now, the continuation we've seen here is the rising US bond yields. We've seen the nominal yield raising, going higher. We're seeing the break-evens. We're seeing the inflation-linked numbers going higher as well, those yields there. So the snowball is continuing to roll. It's all about the reflation trade, if you like. It's about the market putting the central bank calls about their interest rate decisions and when they're likely to start hiking rates into question. And we're seeing no abatement of that at the moment. We had Powell out last week, and he had the potential to put a fly in the ointment, if you like, and to give a stronger message that the Fed are looking at this. And apart from saying that they're going to be on watch for unwarranted tightening and things like that, we didn't really get a strong message. So really, they're happy to let the market do its thing. They're not seeing disorderly markets, which is one thing that was spoken about last week quite heavily. And as long as that remains the case, and the Fed are happy just to sit back and let this happen until such time as things do get disorderly. Now, one of the reasons we've seen these moves is pretty simple. Especially in bonds. We saw a big run to safety last year, throughout most of last year, from the virus, from Feb-March period. And this is some unwinding, because last year, early in the year, the future looked pretty grim. This year, it's not. Simply that view is causing a reversal in the safety trades that we've been seeing. And that's been driving the price higher. So as I said, we're going to look at the weekly chart now. We switch to that one, and we can see that the longer term trend there, which is where that trend line is, comes in around the 108.80 mark. And if we get above there, that again is another signal that we're going to break this trend. We had the earlier trend line, that shorter term one you can see there earlier on, a month or so ago. We broke that. Now we're heading towards this other trend line. If we break there, then we have the potential to move higher. So lots going on in the mix as usual with this pair. It's definite dip buy at the moment, but pick your spots. Keep an eye on also that it's Japanese year end this month and into the end of this month. That could be driving some of these moves in the yen as well. So that's what we're looking at this pair. Continuation again. I'm still long in this pair and enjoying the move higher as long as it lasts, but I'm going to keep my eyes on the levels that are going to be standing in the way. As always, I wish you luck this week.